Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we have a lot to talk about. But first and foremost, Tesla made a breaking news announcement earlier today saying that they have bought 1.5 billion dollars in Bitcoin, about 15% of their available cash sitting on their books right now. What did this do? Well, it did exactly what we expected. We've got more great, exciting memes. And we also saw the price of Bitcoin go up and up and up, crossing almost 45K for those who are keeping track at home. So stay tuned to what that means in the bigger picture as we begin to talk about this subject all week here on VCTV. But today we're going to be talking about business inclusion and what that means for everybody in the world, whether you're building a business or fundraising as well. And digital currencies also play a role in this topic. So stay tuned on how, again, all of this fits together in the bigger picture. But first, a big thank you to you, our audience, for tuning in. If you're liking what you hear, make sure you click subscribe, share, and also check out our archive to hear from today's speakers and all of the speakers of the VCTV family, which can be found on latoken.com. And if you yourself would like to be a speaker here on VCTV, either as an investor or as an entrepreneur sharing your company product or service, do reach out to the team and or myself, and we'll find the right spot for you as we welcome the best and the brightest from around the world to share their thoughts and insights and on-the-ground perspective around different technologies, industries, and those respected regions to make sure you're educated with the latest, greatest, and also the trends of everything happening around the world. And a big thank you to the Latoken team and to Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. Let's go ahead and jump into introducing our investors for today. Harsh, welcome to the show. A little intro, a little background.
Thanks so much, Kyle, for the introduction. My name is Harsh Shetia. I'm a venture partner with Our Ventures, which is a venture fund all the way back from India. We invest in a lot of sectors like SaaS, health tech, fintech. We are completely sector agnostic. I've worked with Fortune 50 companies. I've worked with several unicorns, and I'm currently helping a lot of startups grow their businesses and help them raise funds. So looking forward to be a great part of PCTV as well. Thank you so much.
Wonderful. Thank you, Harsh. Gary Fowler, Grandmaster of Artificial Intelligence himself. Welcome back to the show. A little intro, a little background for everybody.
Yeah, great to see everybody here today, and I see some familiar faces: Peter, Harsh, Noble, yourself, Maria. So my name is Gary Fowler. I'm a serial entrepreneur investor. Done 17 companies, startups. I was on the original management team of Flex Software, which was sold to Salesforce for $1.35 billion. And also Eva.ai, which is one of the top AI HR tech companies. I started 4.5 years ago. So love artificial intelligence and quantum computers. I'm also the CEO, co-founder, and president of GSD Get Shit Done Venture Studios, a premier AI venture studios curating companies from all over the world using Silicon Valley support to help them go global. And I write a lot. In fact, my first articles in Japanese are coming out this week about artificial intelligence and curating AI companies. And also in Forbes, my next breakthrough on quantum and quantum networks. So love to write, and it's great to be here. Thank you.
Wonderful. Thank you, Gary Noble. Welcome back to the show. A little intro and a little background.
Hey, everybody. My name is Noble Dracone. I'm the founder of Dracone Capital Partners, as well as the CEO of Where Play Games. I've been involved in both raising capital for the last 28 years, as well as helping startups through both Dracone Capital Partners and my relationship with M Accelerator. And now we're kind of knee deep in the gaming company in non-fungible tokens, augmented reality, and we've been successfully developing that for the last 4 years.
Wonderful. Thank you, Noble. And Peter, welcome back to the show as well. A little intro, a little background. Peter? All right, I think we might have lost Peter there, but nonetheless, excited to have everyone today to share your thoughts and insights around this topic. So let's go ahead and jump in. Business inclusion and what this means from both building a business and investing. We've talked a lot here on VCTV about the real growth or explosion of opportunities when it comes to building a business and fundraising more than ever in most cases. It's cheaper, it's easier, it's faster to start a business than ever before, whether both physical or digital. From fundraising, we've got more opportunities to fundraise than ever before here in 2021. But what does this mean in the bigger picture? So Noble, let's kick it off with you. I mean, business inclusion, you're looking to start a business or fundraise a business. What does this all mean for anybody looking to get started in those areas?
You know, it's one of those things where it's been a mixed bag. You know, you have a lot of equity and a lot of capital kind of floating around, but people are still, you know, trying to kind of find their way. There's a lot of stuff happening. And so it's been exciting on a lot of fronts where, you know, we focus with accredited investors and private placement deals a lot. And more of them are coming out. You know, I think it was 1.7 trillion was funded in the last year, and we expect it even to be increased. Things have changed across the board with the SEC changing the rules for the CF, or anticipated changes going from, you know, 1.7 to 5 million. So what we're seeing access to capital. Now it's more so, do you have a great idea? Sometimes it's important to still stick with the fundamentals, knowing how to draft pitch decks, knowing how to communicate your concept, and then having a strong problem solution set. But I've been really excited. You know, we've gotten more companies out of both India and Africa that have reached out to us. I'm now consulting with 2 or 3 different accelerators globally to kind of help people figure out not only how to get capital, but to design their companies. And so it's really an exciting time. It's just, I tell people to be cautiously optimistic as well. Don't expect that just because you have a great idea, people are just going to give you money, but the money's out there.
Absolutely. I think that's a great point that tends to be forgotten, is that it's not just about an idea, it's about a great idea and building a business around that as well. Thank you, Noble. Harsh, I want to come to you next on this. So business inclusion, I mean, you're based in India, but looking at companies globally, what does this mean to you and the companies that you work with?
So definitely in India, we've seen a lot of growth in the startup sector and a lot of companies growing up, right? With the kind of the way the government has kind of liberated the way how we do business, how the policies have been implemented, and government recently kind of given opportunity for 1% companies, right? So you don't need 2 to 3 founders to start a company. Even a single person can start a company. So a lot of these liberal policies are definitely helping. At the same time, what is really important is the nature of how a business used to be is changed dramatically. Back in the day, you used to have generational businesses, right? Companies staying 50 years, 70 years, 100 years. Now that trend has kind of gone down. Now the average life cycle of a company at a best is 20 years, 30 years at best. And generally it's typically lower, right? So people need to really understand what the current market looks like, what the current economy looks like, and really observe these small trends, minor trends happening, because each and every trend could be potentially worth millions of dollars, right? So it needs to be very fast, very quick, take the right opportunities and start out something new. That is what we encourage as much startups as possible. And coming from a place like India, where still the market is still slightly difficult compared to the more developed markets like US and UK, we normally try to encourage the best high potential startups, to help them go abroad in US and UK, establish base over there so they can expand, get a more global view of the market, and try to sell their services over there. So we do help a lot of startups with that as well.
So helping startups not just be local, but also be global. So helping them act very locally within their local communities, supporting, re-giving back, and then expanding globally as well. It's a great point, Harsh. Thank you very much. Gary, same question to you. I mean, looking at business inclusion, you work with so many companies, as you mentioned here on VCTV, not just here in the US, but all around the world, including Africa. I know you've had some recent successes there as well. So when it comes to business inclusion, building and fundraising, what does that mean to you and the companies you work with?
Yeah, so I mean, I'm really proud. We have a Rwandan company, a Nigerian company, a South African company. So I mean, we see, intellectual capacity is evenly distributed around the world, but opportunities aren't. And so this burgeoning data that's around us, and I talk about it a lot, about the massive amounts of data, 40 zettabytes, enough to go back and forth. That we took CDs or DVDs, stacked one on top of another, 29 times back and forth to the moon. So, and that number is growing at 67+% per year. So we are inundated with information. And as I said, Alvin Toffler said in Future Shock, then in the 70s, infobesity, we're at that stage today. So we need to have incredible technologies like artificial intelligence, deep learning, machine learning to be able to help us decipher exactly what's going on, and more importantly, help us chart the future. So what do they need? I mean, it's back to basics. I don't know if it's Noble or Harsh said it, but we need to look at the teams, the same things we did before. I mean, it hasn't changed, the teams, but it's a little bit different because we look at three pieces, which is, first is acceleration, second is really regional dominance, and third is going global. Each one of those has significant hurdles that need to be overcome in order to get to the next level. And we really haven't addressed it in a structured way, but think about it. So if I'm in India or I'm in South Africa, how do I go to a global market? And a lot of it, as Peter has told me many times, both publicly and privately, it's about the connections in the network, because the power of the network is incredibly important, but also the power of having the knowledge about the technology is equally as important. And once those two are united, you can change everything. So the beauty of it is having platforms like VCTV that's really connecting the dots, right? This is it. I don't remember, was it February, Kyle, or January?
It was actually last March.
March. God, it seems like eons ago, doesn't it, Noble? It's like, well, that long time ago. I remember when the internet got started by Al Gore. No, but yeah, we're in this incredible time, and this digital transformation's upon us. This morning, I was on another panel, and we talked about what's happening around the world and the funding, and there's plenty of money out there. Now the thing is connecting the dots, whether it's the family offices or the venture capitalists. In the beginning, I remember the pandemic, I had a call with SoftBank, and people were kind of stunned at the beginning of the pandemic of what to do. But the people that didn't move forward got left out, kind of like Bitcoin. So there's an incredible opportunity in front of us, and we're looking for teams that really are forward thinking, that are positive, that have the hipster, the huckster. I mean, we want marketing, we want the technology person, we need operations. So we look at these really balanced teams, and if you have all those pieces in place, you're ready to take off. It's time to move forward. It's funny, Kyle. We talk about unicorns and they're mythical creatures, but they're not mythical once you create them.
That is true. It just takes a lot of time, focus, and effort to make those types of things happen. And Peter, welcome to the show as well. First, a little intro, a little background for everybody, and then I want to come to you around the same question about business inclusion from your perspective as well. But first, an intro and a background.
Hey, Kyle, Gary, Noble, Harsh. Always good seeing you guys. Sorry I'm a bit late. The platform changed. I'm technology retarded, although this is a technology show. So I need people like yourself, Kyle, and Gary, and Noble, and Harsh to help me along the way. I'm still using yellow legal pads. For people that don't know what that is, it's a piece of paper that's in the shape of a legal format. Look, I come from a family office. So what's a family office? Gary asked me this question on his show a week ago. When you have an extraordinary amount of money, you create a family office that basically is run by a proper asset manager or chief investment officer that usually comes from Wall Street or the City of London or similar. And what is an exorbitant amount of money? It's usually 50 or 100 million plus. So I sit in a multi-billion-dollar family office. We have tens of billions of dollars of capital that we allocate around the world in various forms, in various asset classes. One thing that Gary mentioned, talking about acceleration, then regional dominance, then global dominance. If it wasn't for shows like this, Kyle, where you're a pioneer, VCTV, connecting those dots that Gary mentioned would be very, very difficult, because people in developing countries wouldn't know where to connect the dots or how to reach out to people like myself or Harsh or Noble or Gary to help them in terms of that growth and getting them to regional dominance, then global dominance. So that's who we are. We're looking, diversity, inclusion is a very important part of our investment thesis. And as a global investor, you might say, we look at various asset classes. And but most importantly, we're looking to include good people. And what's good people? Good people are, well, they're ESG compliant, they're motivated, they're passionate about what they do. Good people are people you want to have over to your house for a glass of wine and dinner, etc. Those are the people that we want to back, because those are the people that are our friends. They're extensions of our family office. They become family, and I think that's very important.
It's a very, very good point, Peter, and thank you very much. And Noble, I want to come back to you. So taking a step back and looking at the gaming space, whether it be AR, VR, gaming proper that you focus very heavily on, for those looking to get started in the gaming space, what does it take today, and really how can they get started in those efforts? Again, whether building and or fundraising, but what's step one to welcome them in there?
It's funny, Kyle. My background, as you know, 28 years in investments, and so I had no true formal gaming experience. And now we've got 9 mobile apps. We've got augmented reality apps coming out. We're all entrenched in the NFT space, and what I discovered is that there are for project managers, or people who really understand and can conceptualize an overarching idea, there's more than enough talent and skill set out there to bring on, hire, and or contract to do almost anything nowadays, to be frank. I believe that a lot of people try and start absolutely from scratch as if they have to be the programmer, and they don't realize that they can be the ideator, the one who comes up with the idea, and then find the talent and drive it. We have teams in both the Ukraine. There's great programmers and developers in Chile that we work with. We have teams throughout both Pakistan and India. And so being globally minded has already made us so much simpler for what we do. Plus, there's already a lot of gaming templates. The mechanism has existed and has always existed for people to create games. Whether it's board games or digital games, all of which we've interacted with. It's a matter of going to the source and just and acquiring it. So it depends on what your goals are and how you want to get started. In the space, being African American, there really are not that many African American developers and creators here in the U.S. and probably globally, to be honest. And being in the space, that was a surprising shock to me, because the majority of people who play video games, something like 6% of certain games or 80% of certain games, are by African Americans. And so when you look at being on both sides of the table, I think part of it is you have to kind of make a leap. There's more than enough people out there to kind of reach out to and develop, and people can reach out to us directly, and we'll introduce them to sources. We've been outsourced by several. I think one of the people who just engaged us is going to go is being inducted. Elliot is being inducted into the Black Inventor Hall of Fame, who created the Entrepreneur Game. We've been in full development of taking his board game and making it into a digital version, and we're close to finishing that up for the schools. So there's a lot of points of access, but you have to find the people who are willing to work with you to kind of help you out, because it's a cloistered community. There's no real one pathway. As people say, this is how I did it. No one can ever copy how you did it, right? It's one of those things where there's no one pathway to get to where you want to succeed except for drive. And I think that's what leads most people to be able to succeed, period. There will not be an identical version of another Amazon. There won't be an identical version of another Alibaba. There's some good cornerstones and some good points in which they did that you could kind of potentially emulate, but you'll never be able to understand Jack Ma's pain when the Chinese government originally took his first idea, which was Internet Directory, and slammed them down, or the idea that you put out books all of a sudden and sell those online, unless you come up with a new USP. Because I still think that there's a possibility for someone to do that all over again, because books have been ignored realistically by Amazon. So you have to really have the drive, and I think that's the key. And to Harsh's point, to Gary's point, the intellectual capacity is everywhere. It's the access to the resources that makes everything all the different. And Kyle, you created a great forum, period, for people to reach out to us and even us to be on LinkedIn, to have networks that are global. It's a powerful tool nowadays.
Well, thank you, and we're a team effort here at VCTV. I appreciate the praise, but it's a full team that makes this happen. Yes.
Okay.
Yeah. So, but thank you, You're absolutely right. I mean, more education, more bringing people together, and sharing, those thoughts and insights, those successes and failures, those failures which are generally lessons learned, is right. And that was the purpose of VCTV. And a big shout out again to the team that makes this happen, brings us together every day. And thank you, Noble. And real quick on accelerators as well. I mean, you also work with them, Accelerator, and a few others as well. I mean, are these good first stepping stones? And I'm asking you on this in your experience. I have my own opinion, but is this a good first step for entrepreneurs looking to get into the game of whether it's building or fundraising as well?
So Kyle, everybody knows I don't really mince words. I don't try and dampen anything for anybody. So from my experience being as a retail capital raiser, I ran my hedge fund. It was a small hedge fund. We had 30 million under management. I probably raised $250 million during my lifetime with my brokerages and the like. When I stepped into this space, my thought was we were going to work with institutionals, and it was going to be this almost panacea of stepping away from the retail side. And so I'm a member of Founder Friendly Labs. I am Accelerator. I know Brian over at Expert Dojo. I do some consulting for them and a few others across the globe. And I quickly realized that this dichotomy of either or, you can do friends and family round, or you can do angels or VCs, is not really a true scenario. And that's why the government stepped in and created all these other components that allow people to talk to accredited investors. There's over 26 million of them in the U.S. I think they have $9 trillion sitting around in qualified funds. Most people just don't know how to access those individuals and those people. And so accelerators are great. They give people kind of that focus drive. It's like going to a university to just get their idea done. Sometimes people just don't know how to start, don't know how to get their idea done. But when it comes to the capital raising aspect, you still have to be responsible for how you manage and deal with your company. We just recently put out a post on LinkedIn. It's coming out probably later today. And the post is going to talk about how Zuckerberg was able to keep 25% of Facebook. And it talks about him skipping a few rounds and either reaching and bootstrapping certain levels so that they could raise enough capital internally so they didn't have to go after capital so early on, and would allow him not to be diluted all the way down to 4%. So that's what most founders end up with after they get started. So there's other ways to raise capital. There's other ways to look for money. And more companies are finding money on the balance sheet by just having good, solid business. Realizing that reinvesting the capital and not spending your profits is really the core way you can grow your business without diluting yourself into nothing.
Absolutely. And thank you, Noble. I appreciate that. I'm seeing shaking heads left and right, up and down, I should say, here in agreement with you. And Peter, I want to come to you on two questions. One around real estate, which is a big part of your business, but then also family offices. So when it comes to family offices, it's kind of an unknown, bless you, Noble. It's kind of an unknown on how to approach, how to work with, or how to fundraise with family offices. Would love to hear your thoughts on if those individuals that are building companies may be able to work with a family office and how they would get that process started. And then I'll come back to you on real estate.
Well, first of all, I want to address Noble's comments because I thought they were very, very important, particularly when it comes to the point of dilution. And I don't care if you're a family office investor, an institutional investor, accredited investor, etc. It all comes down to the same thing. The people investing in the company, okay, whether it's us or somebody else, is taking all the risk at the end of the day. There's a difference between blood, sweat, and tears, putting it into the business, rolling up your sleeves and getting dirty, and actually putting capital to work, whereas you could lose all that capital that you're putting forward. If you just put your blood, sweat, and tears into something, but you don't have any real capital at risk, you could just walk away. You walk away, and I'm left holding the bag. So I think it's important to understand the importance of capital. Also, willingness to take dilution. Obviously, you want to try to use as much balance sheet and other measures you can before you go to a venture capitalist and angel investor or somebody else, because you want to keep that as much ownership of the company as you can, and obviously as much control as you can. But one of the better ideas of reaching out to a venture capitalist, angel investor, institutional capital, when you get down the road, in that order, basically, right? Venture, angel, and then always on up, is particularly when you get to the investor side, is the significant amount of experience in terms of execution that these people bring to the table in terms of the well-informed investors. And if it's not themselves, they can bring you to others that have that experience. That experience might be capital experience, that may be operational experience, management experience. So I'm not trying to dilute your comments, Noble, at all. I'm just basically saying there is obviously value in an investor. We're not all vultures looking to take everybody's last cent, but we benefit, as everybody benefits, when the company grows and obviously is ultimately successful. So that goes into your question, Kyle, about a family office. Look, I was on a show with Gary's famous show. I was honored to be a guest just last week with Admiral Owens, who's was a four-star admiral and former chief of staff under the Clinton administration. So it was difficult filling his shoes. But Gary mentioned, isn't these family offices just a small squire club, very difficult to get into? And how do you approach them? And I told Gary, look, yes, it is. It's a family office is protecting multi-generational wealth. We're kind of like bond investors at the end of the day. We're trying to protect the wealth of multi-generations. So we're not looking for the huge upside. Let me look for a 10-time return. There could be pockets of money that we're looking for that 10-bagger, okay? But for the most part, we want to get our capital back, okay? And a return commensurate with the risk we're taking. If we're looking for a 10-bagger, then obviously we're taking a lot more risk. If we're looking for real estate investment, boring nuts and bolts type investing, can't expect to have the same type of return. So I think your question is, how do you get to a family office?
Yes.
Well, you could buy a database, they're sold on LinkedIn for like $1,000, and here's a list of all the family offices, and you could try cold calling them. That really doesn't work because it's not like going into BlackRock or an asset manager and trying to find somebody and they're happy to introduce you. At the end of the day, family offices, I would argue, have as much wealth or almost, and probably will exceed the wealth of some asset managers as the wealth increases over time, particularly technology investors, because they're the ultimate growth in capital. The capital is unlimited. Mm-hmm. It's the bandwidth, and the bandwidth is the human capital. How do you get somebody like myself to concentrate on your particular idea when I sit in this chair for from 7 a.m. to sometimes 12 o'clock at night, just seeing new deals all the time? I think it's about relationship. So going to some things that Gary would speak to in Noble is basically the relationship. Going from the start is, I'm a nuts and bolts investor at the end of the day. I'm not a high-tech person, but I know lots of high-tech people. And I know where to go. I'm either going to turn to Noble, I'm going to turn to Gary, I'm going to turn to Harsh. And if it's not those three, I know plenty of small investment banks and others that I can direct to. So at the end of the day, it's that relationship. Family offices are a small set of the whole capital provision that's out there, but they can be a very powerful set because for the most part, I think family offices, in many cases, if you have a venture capital fund or an angel fund, okay, if they make extraordinary wealth from their venture capital investments, whether it's into a Zuckerberg or Amazon or et cetera, they create their own family office afterwards. Zuckerberg has one. Everybody has a family office that has significant amounts of wealth. And they're looking to put that wealth usually for something philanthropic and then also for something that generates a great return. So all those technology people also have family offices, just like anybody who has ever been a successful entrepreneur. So it's trying to figure out which family offices are focused on the sectors that you're involved in. Okay. So if you've got a technology company, okay, look for the heads of the companies, whether that's the founders of Apple or Amazon or whatever, LinkedIn, et cetera, and see if they have a family office. Then try to find somebody that can introduce you somebody at that family office. Because at the end of the day, we're just people. We're happy to talk to anybody. We're happy to look for ideas. We're happy I think more than any other asset manager, we don't have pension fund money. So we're not looking to protect teachers and family and firemen and others. So we have a lot more flexibility. We're not looking at benchmarks. We're looking at our performance relative to benchmarks. So we're probably more open. Take a look at opportunities presented from wherever they come, whatever shape or form. And if it's not for our particular family office, we'll find another family office to introduce you to. It's about good people, good management teams. It's all about the execution. If you have a good idea, okay, let's see if we could find the management team that can execute on that idea. And we're happy to help with that.
Absolutely. Thank you, Peter. And Gary, I actually want to come to you next around artificial intelligence. AI is the new electricity, as you put it, but it's also finding its way into almost everything that we do because of the amount of data that we generate. So for those that are out there listening and maybe looking to build their first company using or in artificial intelligence and or fundraising, what advice do you have for those that, again, are just getting started in this space? Again,
just pardon me. I didn't realize our fire guy is in the house and the alarm's gone off. She's checking it. My dog's howling, so my basset hound's howling and barking. So if you hear barking in the background, it's kind of funny, actually. So she was in the room with me here howling. Anyhow, so what was the question again?
Yeah, how do companies? So for entrepreneurs looking to get started with artificial intelligence, either to build or to fundraise, what advice do you have for those looking to get in to start their first business or fundraise for their AI business? Because artificial intelligence, you go back 5 years, was a buzzword. We saw multiple venture funds raised. And I mean, we're talking double-digit $1 million funds raised off the premise of artificial intelligence, but no real idea as to where that would go. Fast forward now, we've got more data than ever. Data needs to be used. It needs to be actionable. There is a room for artificial intelligence. But take away it being a buzzword, company or founder looking to build with AI for the first time. They're looking to fundraise and their company that has or utilizing artificial intelligence. How do they do that? What's the first step? What advice do you have for them getting started?
I mean, the situation is so look down at machine learning and deep learning and unsupervised and supervised, semi-supervised AI. So, I mean, step number one is each one of the vertical markets has a problem. The problem is they got too much damn data and they don't know what to do with it. And they're inundated with this data. So it doesn't matter if it's a supply chain, it's transparency. If it's manufacturing to robotics and artificial intelligence to run a shop floor, it's across the board. And so it's self-driving cars, you name it. So where do they start? So what I would do is look at where you have some type of vertical market expertise or find somebody that does. Look into that particular market. Look, they're going to have challenges with massive amounts of data. First of all, figure out how you can look at that data, understand how to bring that data in. And secondly, how to be able to manipulate the data, put it on a dashboard, and more importantly, how you can go down through and start the AI can start, as I say, intelligent assistants, not smart, but intelligent, actually on their own start to make decisions. And it's, I was just conversing with Morpheus last night. Morpheus has learned a lot over the last, Morpheus is the AI tool that my friend has in his house, but it's learned a lot. And so the training sets are critically important. So this is going to be a problem. That's going to be a problem across multiple verticals as it is now. Look at drug discovery and AI. So what you need to do, intersect where you've got some expertise, find people that share your vision and values, and understand that, you got to, as we say, you got to stay positive. You got to be optimistic. You got to visualize where you want to go. Find the right kind of advisors, right? You need security is always going to come up as an issue. Yep. For sure, a guy like Rick Orloff. You're always going to need somebody who's got connections. So somebody like Peter, right, that can come in and help. Or somebody like Bill Reichert, Guy Kawasaki's partner. You need to build it. Optically, you need to build it. And the other thing is each one of the steps of doing a startup, whether you're in acceleration, whether you're at a regional dominant stage or a global stage, each one of them have obstacles. You got to understand that you may not have the answers. And by the way, most founders don't survive after Series B round of funding. I mean, there are professional management teams that come in. It's like a relay race. There are people that are good at certain things, and you got to understand that. The ones that aren't flexible mentally, to be able to understand. Just think about it this way. 100% of zero is zero, right?
Mm-hmm.
So I said, oh, I want to keep all, I've heard this, right? I want to keep all the equity. I've got a lithium fluoride battery that's going to dominate the world. This is a true story. And yet at the same time, you know, you don't want to share, you don't want to bring people in, or you don't want to give them enough of the company for major investments. They're going to do it.
Mm-hmm.
You know, it's like, why would just somebody like Peter or Noble or Harsh aren't going to come in, or yourself, Kyle, and invest in something if we're not going to? It's got to be a win-win. Everybody's got to win. This is not easy. It's like being married. The best VCs, the best investors, the ones that you go down this journey with together. They're, you know, you never have all the answers going in. In fact, you know, you'll change a lot, but you got to have people that are flexible and can give you some advice, give you the connection so you can all work together to create a company. And you never know when you get started. When I was on the original team of Click Software, we got started, little tiny company from Israel. Who would have ever thought, well, I mean, I did, right? That it would be a $1 billion company. So it's a matter, you know, Facebook, look at Facebook. Zuckerberg didn't think about it from the beginning. Look, I mean, I talked to Stuart Butterfield from Slack. He almost went out of business. So what you do have to do, though, is you're going through this journey, look for those teams that are positive, look for those teams that are focused and, you know, flexible, resilient.
Thank you. And with that advice, I want to come to Harsh next. I mean, Harsh, you're working with a number of companies in India and probably globally to come into India, but also those locally to go out and be global. What advice do you have for those generally when you're starting working with them on how to expand globally and or enter the market in India?
Correct. So some of the points have already been covered by Noble and Peter and Gary, right? So if you look at one of the major points which we recommend primarily is let the revenues fund your growth. That is one of the most crucial elements which we stress on, because as we kind of raise more funds, you constantly dilute yourself. It becomes increasingly difficult to kind of maintain that motivation, right? So one of the biggest acquisition stories for India about 2 years back was when Flipkart was acquired by Walmart, right? The two founders collectively barely had 4% equity within the company. They had lost the operational control of the company 3 years back. It was run by a professional CEO, to the point which Gary was making earlier, and they did not have too much control over the company whatsoever. And they simply got an exit at the end of it. So that is why we kind of stress that, you know, having revenues at the early stage is extremely critical, right? At the same time, it is also important the fact that you have to be willing to share, right? Thing is, if you could truly go global, you're expanding to whole other markets, and your revenues are going to at least double 5 times or even 10 times, right? And if you're, you know, trying to keep it all to yourself, it doesn't work like that. I normally tend to give them an analogy. Do you want 100% of a grape or 110% of a watermelon? So that is the kind of analogy I kind of give them, that you need to look at the bigger picture and the value that it offers, right? A mountain is always at an incline. It's not a vertical mountain, it's an inclined mountain. And across that incline, it kind of represents the entire people in the value chain who have kind of made you reach to that level. You can't climb all the way up there by yourself, right? So these are kind of some of the things which we recover. At the same time, what we also focus on is you need to be very open-minded, right? The startup has to be global, but at the same time, it has to be local as well. Each country has their own nuances, their own preferences, their own biases, and those local nitty-gritties are there. If Amazon would have come to India with the Amazon US mindset, it would not have succeeded, right? That's why they had to bring in the cash on delivery model to be able to expand into India, without which it would not have it would not have been possible. So these are the kind of local preferences which are there. You need to understand what the local mindset is, what the people think like, and that sometimes even means changing the product UI, because they may not be comfortable seeing the product in a certain way, which might be comfortable for someone from another country, right? So there are lots of different permutations and combinations, and that's why we need founders who are extremely flexible and understand what these integrities are before they actually take that leap of going global.
Thank you very much, Harsh. So, gentlemen, I want to come around to each of you for closing thoughts, quick closing thoughts, and then where you can be found online. As this is a topic we're going to continue. It's going to be the underpinning of a lot more conversations that we have here at VCTV as we welcome more founders, more entrepreneurs into the realm of building a company as well. So, Noble, let's kick it off with you. Closing thoughts, and where can you be found online to continue the conversation?
Yeah, closing thoughts. Peter, I did not take any kind of offense at what you said. You're absolutely right. People do need to realize that they're going to give up equity. But the problem that I have is that too many people look at it as a panacea, that by working with a venture capital or an angel or whomever, that all their troubles have ended and now everything is perfect. And now you have to realize that you have a fiduciary responsibility and you're a custodian, not only to your customers, but to someone else's funds. And you have to be a good shepherd to do it. And I think that 99% of founders early on are just not. And it's not because of not wanting to be. They're having to take extreme risks in order to make it work in the first place. And because they're taking extreme risks, they try and get too much outside capital too early before they even know who they are, both as a person and as a business. And it's good for people to, I believe, bootstrap as aggressively as possible, as Harsh's point, so they realize when the point is to bring in capital and they don't find themselves highly disappointed at the end. Too many founders come away hyper disgruntled who've gone through the gauntlet and seen that, and Peter mentioned it, that feel like they were venture capital or vulture capitalized when realistically they resisted something that was necessary as a part of the growth. Founder syndrome is real. Sometimes founders can't live past Series B, and then sometimes they can. It's rare that a founder can. Sometimes, and so the reality is, no, it's a good point. Outside capital is important, but outside capital too early turns you into an employee. You can always easily reach me on LinkedIn, Noble Dracone, at Twitter, at Dracone. I'm getting better at it. Some people technically challenged too, Peter, sometimes. And so, yeah, just reach out to me anytime. I'm available for both discussion, and there's a lot of ways to kind of drive forward the conversation from there.
Wonderful. Thank you. Gary, to you, closing thoughts, and where can you be found online?
Yeah, so we're in a dawn of a new era. As I've said many times, the amount of data around us presents incredible opportunities for companies from all over the world. The digital transformation's upon us. Look what's happened over the last year. Here we are all over the world, in London, in India, in San Francisco, in LA, and Palm Beach. And so, we're connected together. It's changed things a lot, and I'm very encouraged about it. And it's really democratized opportunities to the much more higher degree. So this is an opportunity for the startups that are out there. Go get them, get shit done, move forward. Don't second guess yourself, move forward. If you got to pivot, you pivot. It's not failure. It's just making a turn. If you make a wrong turn, you turn around and you try something else. So move forward with it. You can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter. Love to hear from you. I have my show every week. Tune in, and I love to hear from you. So reach out, and thanks, Kyle.
Wonderful. Thank you, Gary. Harsh, to you, closing thoughts, and where can you be found online?
Absolutely. So the COVID has kind of highlighted a very particular issue, right? That there used to be a mindset that having a job, a stable job, a kind of job security. If anyone still kind of believes that, they are completely deluding themselves, to be honest. Because right now, this is the easiest it has ever been to start a business, to get funds, to start market your business, right? You can run Facebook ads for like $50. You don't need a lot of money. So if at this point of time people don't start their business and don't kind of make themselves financially secure in a true sense of the word, it's very difficult. So I would urge everyone that take advantage of the opportunity that the government is providing. You have so many proactive VCs, accelerators who can offer you tons of opportunities. Just go out there and experiment with it, right? Because it's not that hard, considering what it used to be a couple decades back, right? Just stay on the pulse and try and experiment new things. That is the only thing which I would recommend everyone. And I'm reachable at Harsh Shetya on LinkedIn. You can easily send me a connect, and I'd be happy to reach out to you and have a word on the same. Thank you so much.
Wonderful. Thank you, Harsh. And last but not least, Peter, closing thoughts, and where can you be found online?
Yeah, so one of my mottos is success is determined by the individual. And that can mean many different things to many different peoples. It might just be success in a relationship, success if you want to have a yacht one day, whatever. It could be monetary, it could be health, other things. But as Gary mentioned, we have a unique opportunity right now. The world has never been more positioned when there's more empathy out there than ever has been in many, many years, despite the crisis that went on in the U.S. Over the last year, where people can come together on shows like this that you, Kyle, and Maria and team put together, where you can meet entrepreneurs, other entrepreneurs, funders like myself, investors, etc., which before you would never, ever have the opportunity to meet, let alone speak to. We are basically leveling the field. As an organization, if we look at the global footprint, we now have a very horizontal organization where it just takes a call, a Zoom chat, etc., to meet somebody that has all the capital in the world, whether it's a family office, asset manager, or other. And people like Harsh, Noble, yourself, Kyle, Gary, and myself are happy to speak with people, mentor people, and help. And so when you talk about the name of the show today was Business Inclusion and Investing, you know, we're here. Reach out to us. I can be found at the Weimer Family Office's website, wfo.am, weimerfinancial.com. I'm on LinkedIn. I'm on Facebook. I have a website, peterplout.com. Gary knows where to reach me at all hours of the night, so you can always reach out to Gary. You can find me as well. And I'm just waiting for Noble to give me more calls so you know, we could do some wonderful things together. And again, I'm so sorry I was late getting on the show. My wife says sometimes I'm full of artificial intelligence, so I had a little bit of difficulty getting on today. So I'll leave my comments at that.
No worries. Peter, Noble, Gary, Harsh, thank you so much for sharing your thoughts and insights around today's topic. It's been an absolute pleasure, as always, having you here on VCTV. And thank you to our audience for tuning in. If you like what you heard, click subscribe, share the episode, and also make sure to check out the archive on latoken.com to hear from all of our speakers today and the entire VCTV family from around the world. And if you'd like to be on a show like today as an investor or as an entrepreneur, please do reach out to the team and or myself, and we'll find that right spot for you. Speaking of team, a big thank you to the Token team and to Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott, and you can find me everywhere online at Kyle Ellicott, along with all of our speakers today on all social media platforms as well. And when you reach out, make sure you add context where you heard us, where you saw us, and what you'd like to continue the conversation about. With that, we're going to take a short little break, and we'll be back here with more VCTV in just a few moments. Bye, everybody.